Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Trading Hour on CNBC TV18. I'm Ekta Batra. With me is Prashant Nair, and it's turning out to be a session where we're just about consolidating. So we had the possible enthusiasm that the Nifty would be at all-time highs today, but that still eludes at this point in time. But separately, it is also the Midcap index, which had initially given up its optimism or its gains that we saw, but we're seeing some amount of buy on dips, which is coming in for the Midcap index at this point in time. Remember, it's an outperformance for the Midcap index on a week-to-date basis as well. For example, the Nifty Junior itself has given returns of 4% on a week-to-date basis. A lot of stocks in focus. So, for example, Asian Paints reacting to numbers, Symphony reacting to numbers along with Hexaware, and something like an NHPC and NTPC on the back of news, cement companies also. But separately, a lot of results to watch out for as well. So we have Larsen & Toubro, the big boy, releasing numbers today. Hero Moto, especially important after Bajaj Auto, Jubilant Food, obviously because of the same store sales growth, BHEL, Ambuja Cement. Bharti Airtel comes out with numbers tomorrow, but just want to point out that that stock is the top loser on the Nifty at this point in time. Hi, Prashant.
Ekta, hi. I mean, I hope we've not jinxed the all-time highs, right, in the Nifty. But it looks like it's a little sluggish, not like what we've had in terms of overnight sessions. I mean, if you looked at overnight session, it looked like it could have been a gap up, and that the gap up could have gone on, but that's not the case. The other, I don't know if it's positive or negative, even though the currency in China is depreciating, basically the dollar is rallying against both the offshore and the onshore yuan, the Chinese currency. Stock markets are not really selling off or anything. I'm talking about the Chinese stock markets. They're actually holding on even as the dollar is rallying. So, I mean, that's just one observation. Otherwise, it's pretty tepid. I mean, there is no really big new development to focus one's energies on in any meaningfully different way. So at some point, I guess we take that 11,171 mark out, maybe today, maybe tomorrow. It's, I guess, a matter of time. Sudarshan Sukhani of S2Analytics.com is joining in with his thoughts on things. Sudarshan, good morning. Good to have you here. Your sense on the market and what would you be doing?
Yeah, good morning again. See, markets pause. This is a common phenomena. They expand and then they have a consolidation. This is not anything unusual. It just so happens that the market decided to have a consolidation today when all of us were waiting for the big bang. So that taking out of lifetime new highs, that's the market for you. It puzzles us always. The trend is up. So as you said, I think the same. It's a matter of time before we take out those lifetime new highs. Whether we do it today or tomorrow or Friday is different. Can't say that. I'm assuming soon.
Sudarshan, but are you seeing a little more optimism in, say, the mid-caps, considering the kind of rally we've seen week to date?
Yes, good quality mid-caps should continue to do well. At least the good quality is going to participate in the Nifty rally if it comes about. And I do hope that the Nifty rally has another 300 points more on the upside.
What would your stocks be then?
Well, the stocks are then mainly mid-caps. Yes Bank is a buy. It's the better among the private sector banks in the short term. So it's gone through a correction, so that's behind it. Consider buying Yes Bank. Consider buying the big boy Reliance. Reliance has had 2 days of narrow ranges, very choppy trading, nothing doing. So perhaps it's now ready for a up move again. Reliance is probably going to be a driver in any Nifty rally. So Reliance is a buy. And finally, Britannia from the FMCG pack is a buy. Britannia, Nestle, Dabur, all of them should be looked at as buy on dip candidates. And today I have Britannia.
Okay. I think we're losing the connection a little bit. Sudarshan, I think, is still there. So let's put some Twitter questions to him. Girish holds 100 shares of Tata Steel. His cost is 550 rupees a share. He wants to know where it could be in a year's time. Sudarshan, Tata Steel?
Well, I think it should be higher. So my suggestion would be to hold it the shares. But Tata Steel is still going to likely to underperform the broad market. So if he wants, he can switch to IT, pharma, FMCG. There are so many other sectors that will do better. But specifically for Tata Steel, hold on. 1 year later, you will probably see higher prices.
Okay. All right. So that's the view coming in on Tata Steel. Well, Sudarshan, we're going to thank you on that note. Thanks very much for joining in and bringing us all of those technical calls. We have some more strategies lined up. Yogesh Mehta is joining in to tell us what he's tracking from the F&O space. Yogesh, hi, morning. Over to you then. Stocks as well as index call.
Yeah, good morning. On the Nifty front, the indexes have closed at near to the all-time highs on the closing level and are trying to breach that level of all-time high after Sensex. So today again 11,153 is the high. We believe that it seems on the charts, the pattern suggests that 11,080 seems to be a strong support level, and 11,050 will again be a trailing support level number 2. So there we believe that again it will be a buying opportunity. Any breach above 11,175, 180 level would be again a strong opportunity for the short covering rally again we can see. So that gives a bullish opinion from the buy side. The stocks which we are suggesting on a mixed bag is McDowell. Post results day for yesterday it is corrected and now 585 is the current price. 560-65 zone is a strong support level for that, and one can keep a stop loss of 560. The 584, 585 is the current price, and target could be in the range of 618 to 625 levels. The other one is Biocon. It is trading very near to its 200-day moving average, so likely to be a rebound. A bounce is likely to be on anticipation basis, and current price is 567 in the future segment. Keeping a stop loss of 553, target could be in the range of 590 to 593 level. And a short candidate is United for UPL Limited. Current price is 625, 626 in the future segment. Keeping a stop loss of 638, target could be in the range of 590.
You know, in terms of currency markets, what is interesting to note is that the dollar is once again on the move against the Chinese currency, the yuan. So where are we headed there? I mean, last week we got to a point where people were starting to think about whether we will get to that 7 number on the dollar yuan. And then it kind of sort of abated a little bit, but it's on the move again, not in a very significant way. Gauki is Forex strategist for emerging market, EM Asia at Scotiabank, and he's with us right now. Gao, thanks very much. Appreciate you joining in. Your sense on what we are seeing on the Chinese yuan at this point, and you know, is the talk of the 7 handle back on the table in some senses? How's the willingness of the Chinese authorities to let this happen being interpreted?
Good afternoon. Yes, we know yuan depreciate markedly in the past sessions. However, at current stage we saw dollar CNY or dollar CNH consolidating at around 6.8 level. In the near term, I think 6.9 could be the bottom line for dollar yuan exchange rate. According to our estimate, our analysis, as long as the yuan depreciation is an orderly move or in line with broad market movement, it will be tolerated by Chinese authorities. However, they will definitely step in to curb one-way speculation. So I think U.S.-China trade tensions will continue drive the yuan exchange rate in the near term.
Okay. You know, in 2015, when there was the yuan depreciation which had taken place, there was quite an adverse reaction by equity markets on account of that. Do you think that the markets have largely factored in, say, the kind of depreciation that we're seeing from the yuan, and equity markets or currency markets are not going to react in any adverse measure to this?
I think if yuan depreciate sharply or at a very fast pace, China's own equity market will be impacted. We could see both equities and the Chinese yuan dropped. But in the past sessions, what happened in China is Chinese government has said it will employ a more proactive fiscal policy in the second half, And earlier, PBOC has indicated it has fine-tuned its statement about liquidity to keep liquidity at a reasonable and ample level compared to previous statement keeping liquidity at reasonable and neutral level. So a policy combination of proactive fiscal policy and relatively accommodative monetary policy, will boost risk appetite in onshore equity market. So that's why we see some divergence between onshore equity market and the Chinese yuan in the past sessions.
Okay.
Gao, in terms of when you speak with clients, etc., is there real concern about growth in China? I mean, if you keep all this trade stuff aside.
I think to some extent, yes, to some extent. Chinese government also said it will encourage expand domestic consumption in the second half. I think it's because of continued U.S.-China trade tensions. Exports will possibly no longer an engine for economic growth. So China need to boost or expand domestic consumption. So it shows, to some extent, shows their worry about economic growth. But in general, I think for this year, the target should be achieved. There should be no problem. Yeah.
What's your sense on the rupee? We've bounced back from 69.12 or thereabout. But what's your target, and where do you see it averaging out?
I think at the current stage, rupee is driven by two factors. One is external uncertainty, largely due to U.S.-China trade tensions. Another is oil price. Both factors are negative for rupee at the current stage. But in the past weeks, we saw 69 was defended. So. In the near future, expect rupee to trade in a range and remaining susceptible to external movement. If risk aversion intensified, dollar rupee will rally through 69 level. But if sentiment improved, I think dollar rupee will pull back to 68.